Okay, good morning. Just checking participants. Yeah, we have people joining us now this morning. You're very welcome. Just going to give a couple of a minute or two just for people to sign in. Delighted to have Judy and Dawn with us this morning to go through HR and finance updates for small businesses in changing times, and that's for sure. It's been a roller coaster the last 2 years, that's for sure. So just a few more people to join there now. Okay, we're a minute past there. I think we're happy enough. I think we might kick off there. Just before we start, actually, just to the date that's in it with the passing of Aisling Murphy, we felt it was appropriate, just on behalf of the chamber board, its members and staff, that we'd like to take a minute just to remember and pay tribute to Aisling. I know that her funeral mass starts at 11 o'clock. Look, it's a tragedy that just words can't describe the pain that the family must be feeling at the moment, but I just want to let them know and send our condolences to the family and friends and all the associated clubs and things that she was involved in, of the sincere challenges that are going to be ahead of that family. There's no doubt about that. But look, so I was just thinking we might just take a minute's silence just before we start the webinar. That's lovely. Thank you so much for that. And pay our respects. Thank you very much. May Aisling rest in peace. So look, you're very, very welcome to this morning's webinar, HR and finance updates for SMEs in changing times. I'm delighted to have Judy and Dawn. We were just saying there before we joined the way, it's like the commitments were back together again. It started out at the very start of this lockdown situation nearly 2 years ago. We were taking our first webinars with Judy and Dawn, talking us through the challenges there, and there are still challenges there, no doubt. And that's what we want to kind of cover off today, to give you the information, to give you an opportunity to ask questions on HR and business related issues. So just in case anybody isn't aware of who Judy is, Judy Pollock is the owner of Consult HR, who specializes in providing human resources and employment support to a wide range of employers through Northern Ireland. And Dawn McLaughlin is the principal of the Progressive award-winning practice in Northwest. And Dawn McLaughlin, and she's owner, and Dawn is Dawn McLaughlin Co. Accountants. So, I mean, at the start of another challenging year, Chamber aims to support SME members by providing up-to-date business advice and support in conjunction with our HR finance experts and fellow members, Judy and Dawn McLaughlin. So maybe Judy, I could just hand over to you, maybe to cover off some of the challenges that are there. I think the format we're going to go is maybe put you first, Judy, take some questions then after you finish your presentation, from because we have some questions from members, so we've already sent them in advance. And then we'll move to Dawn, if that's okay. Then Dawn, you can do your presentation. We'll have any questions, then we can summarize at the end of any outstanding questions. And please feel free to put questions into the text box at the bottom of your screen. You know, we want to try and get as many of your questions answered as we possibly can this morning. And if there are questions that we can't get for you, then because it is a complicated area, we will certainly come back and try and find those answers for you afterwards. So Judy, if I could just hand over to you then, please.
Great, Paul, thanks very much. So I suppose the kind of main topic areas that I wanted to talk about was the changes that we've seen coming into place since December and into January, and the impact, I suppose, that has had on the businesses. Some of the information that I'll share with you, you may already know about, or I might give you a few wee nuggets that you maybe don't know about as well. So I suppose what I'm seeing as the big challenges for employers is the change in the isolation guidelines. And that really has driven absenteeism up. And the stats are kind of suggesting that employers are managing in and around with between 20 to 30% of absence of their staff. So it's fairly significant, and they're certainly feeling the pinch in terms of that. And it's putting a lot of pressure on businesses in terms of being able to deliver their products and services with a limited workforce. And lots of businesses as well are already understaffed because they're trying to fill positions that they just don't have the resources and the applicants coming in to fill those positions. So there's lots of different strange things going on out there. So look, if I maybe talk first of all about the current changes that we've seen over December and January, in terms of the testing and the self-isolating, we no longer, as we know, the staff don't have to take PCR tests. We're relying on the lateral flow tests there, and that's just because the availability of PCR tests just aren't there because of the demand in terms of the spike in the coronavirus. So essentially, if staff have symptoms or if they're a close contact, they need to isolate immediately. They do a lateral flow, and then based on the result of the lateral flow, you then decide whether that staff needs to isolate or not. I suppose for the first time ever, they've introduced different regulations around what do we do for vaccinated staff and what do we do for unvaccinated staff. And that's, I suppose, created a bit of a disparity in terms of those two groups of staff. So the vaccinated staff only have to isolate if they have tested positive. So obviously they'll isolate if they have symptoms. They'll take their lateral flow. If their lateral flow is clear and negative, they come back to work straight away. However, unvaccinated staff, they obviously self-isolate if they have symptoms, or if they're a close contact, they're immediately isolating for a 10-day period, and they cannot end that self-isolation any earlier than the 10 days. So even if they take a lateral flow and the lateral flow is negative, if they are deemed to be a close contact, they're out of work for 10 days and they have to self-isolate. And that is causing lots of problems in terms of the absenteeism for employers. Again, vaccinated staff, if they take a lateral flow, as soon as that lateral flow is negative, they return to work if they're a close contact, for example. So as we know as well, there has been an introduction in terms of ending the isolation period early. So if an employee has had 2 negative lateral flows tests, they start testing on day 6 and day 7. If they have 2 negative flows in those 2 days, they can return to work after day 7. That is only for that's for vaccinated staff, but it's also for individuals who are unvaccinated, but they've tested positive for COVID, so they can return to work early. A close contact cannot return to work; they must do their full 10 days. In England, that time frame has reduced to 5 days as of yesterday. Northern Ireland is still debating on that, and they haven't made a decision of whether they will reduce that isolation period to 5 days. But the difficulty that a lot of employers are finding now is that even whenever employees come to day 10 and they are doing their lateral flows, they're still reading a positive result. So in that regard, they can't return to work until their results are negative. So lots of employers are asking questions around, well, what information can I ask for? You know, can I ask people, do they vaccinate? Are they vaccinated? Are they not vaccinated? What information can I ask in regards to that? Can I ask them to send me in the lateral flow test? So I suppose what I'm saying to employers is you need to have a clear purpose. This information is protected under GDPR because it is health related. It is deemed to be sensitive information. So you have to have a purpose around why you're asking for that information. You need to be clear about what you're actually doing with that information. You need to make sure you're protecting that information from disclosure. And it might also depend on the sector that you're working in as to whether you're asking, depending on what information you're actually asking your employees for. So, for example, if you work in the healthcare sector, if your staff work with vulnerable individuals, then you might have a justification to say, we need to know, are you vaccinated, are you unvaccinated? We need you to take a lateral flow every day. We need you to send us in a copy of that lateral flow, picture of it, to let us know that you've done the lateral flow and it's safe for you to come into work. So it will be very much dependent on the sector, the reason why you're holding that information and what you're going to do with it. So statutory sick pay, obviously pre-Christmas, there was a change in terms of the statutory sick pay reclaim for employers. So obviously they realized that the amount of sick pay or the amount of absence is going to increase. So what the government has done is they've brought that reclaim scheme back into place. So employers can now reclaim back a period of SSP. So that was in place earlier on the year, and then they stopped that scheme. Can't remember, but it was maybe in the summer sometime that they stopped the reclaim of the SSP. They've brought that back on board as a completely new scheme now for employers. So the employee, if they're off due to COVID-related absences, they're entitled to SSP from day one. They must have been off for 4 consecutive days to be eligible for SSP. So if you have an employee, for example, who has symptoms, they're vaccinated, they may isolate for a day, take a lateral flow, the lateral flow is negative, and they come back to work the following day, they'll not be entitled to statutory sick pay. It's those individuals who have 4 consecutive days off due to COVID that are entitled to SSP. The employer, as I mentioned, can reclaim the SSP payment up to 2 weeks per employee. As long as you have 250 employees or less, you're eligible to make that claim. You can claim back as far as absences that started on the 21st of December. The HMRC portal is opening mid-January. It may already be open now. I'm not sure of the exact date, but mid-January is the date that employers can start claiming for that. It is a new scheme. So if you had particular employees who self-isolated and you claimed SSP for them in the previous scheme, and they now have had to self-isolate since the 21st of December, you can claim for them again under the new scheme. So that's fine. Also remember to keep your HMRC records for 3 years in case the HMRC do an inspection and want to know about the people that you paid SSP to and then claimed back through the government scheme. The extension to self-certification timeframes. So again, as the booster program was rolled out pre-Christmas, there was a change made to self-certification. So pre this scheme, employees could self-certify for 7 days. Once their absence extended beyond 7 days, they had to then provide a GP fitness to work certificate to say that they were unfit to attend work. That has been extended where an employee can now self-certify themselves for 28 days. Now, it is only a temporary scheme. It came into effect on the 10th of December, and it is due to expire on the 26th of January. Now, there is also a clause wrote into that where they may extend that scheme, and they can extend it up to a period of 12 months. So we don't know yet whether that will extend or not, but essentially anybody who is off sick during that period of the 10th of December to the 26th of January, they can self-certify themselves for up to 28 days. You may have seen IKEA, Morrison's and Next hitting the headlines this week, and this has really come about because employers are really feeling the pinch around the absences. And also it is more likely that an employee who is unvaccinated is going to have more time off work than an employee who is vaccinated. So those large corporate organizations have decided to take the approach that they have an enhanced sick pay scheme. So they pay their employees more than the government requires them to. And they've taken the stance that they are not going to pay enhanced sick pay scheme to employees who are unvaccinated. And I suppose there's that level of frustration. They're frustrated at the fact that some employees have not taken up the vaccine scheme. And again, in Northern Ireland, we can't force staff to take the vaccine. We can encourage them, but we can't force them to take the vaccine. But Next and IKEA and Morrison's, and I'm sure there will be a number of other companies that will follow suit, that have taken the approach that if you're off and you're self-isolating because of COVID, they will just get statutory sick pay. And anybody who is off and is vaccinated because of COVID, they're going to pay them full pay. Now, the one thing that they have wrote onto their policy or are considering is those individuals who are unvaccinated because of an underlying health condition, they will have special consideration, because obviously there is potential links there to a disability discrimination complaint. So they'll take that into account. But I thought that was really interesting to highlight that there are some organisations that are taking a stance on this in terms of vaccinated and unvaccinated staff.
Judy, could I just jump in there now? And thanks so much for that contribution so far. But there's a question that's come in there from Mark Johnson, which actually just touches on what you talked about there. Is there likely to be a test case potentially around that treatment of vaccinated and unvaccinated staff? And would that be a significant risk maybe going forward for businesses who decide to take that tack? I guess IKEA and Next have thought these things through, or have they,
Yes.
I
mean, that thought has obviously crossed my mind, and I've gone through it in terms of what are the potential risks to an employer to take that position where they are not going to pay unvaccinated staff. And they've already identified that risk, which is those individuals who have an underlying health condition and have decided not to take the vaccine because of the risk to their health connected to the vaccine. So they've already identified that, and they've made provisions in their policy. Outside of that, Paul, I can't identify any other risks, but absolutely, there certainly could be a test case of some sorts, but just looking at the potential risks, I haven't been able to identify any others either.
So they're taking the view that people who are vaccinated and be seen to be doing the right thing, if we call it that they don't want them to be, they're actually being punished, I suppose, really from an income point of view, relative to people who are unvaccinated, or they can get more time off, the unvaccinated. Yeah. And if they don't make the change, they'll be paid for their time off, when the vaccinated will have to go to work, basically.
Correct. So if you take the example of someone who has been a close contact unvaccinated, they're out of the place of work for 10 days. A close contact person who is vaccinated, they take a lateral flow for 10 days following the close contact, but they're back to work. They're
back to work straight away.
The only point in time that they will go out of not be able to attend work is if they tested positive.
Okay.
And that's the difference, in the two categories, and the employers are feeling the pinch in regards to that.
I think you've touched on the point. Can you ask employees if they are vaccinated or unvaccinated?
Yeah, I mean, look, the way that most of my clients are dealing with that at the minute is they're not going out and asking for a register of staff of whether they're vaccinated or not. But at the point in time that the individual is either tested positive or if they're a close contact, what I'm finding is the employees are actually coming to the employer and saying, I'm a close contact, I'm unvaccinated, so I think I need to self-isolate for 10 days. Is that correct? And that's how they're gathering their information on a case-by-case basis as it arises. Because otherwise, what is the purpose? Why are you actually creating that information, or why are you collecting that? And it's back to the GDPR, and I don't think employers need to do that. They're better doing it on a case-by-case basis.
Case by case. And just another question I have before we maybe move on. How do you verify that a staff member is being genuine, that they have a close contact or has symptoms of COVID? Is it very much based on a trust basis? I mean, is it the picture of the lateral flow test you said, or?
Yeah, that is a really tricky one. And I have been dealing with lots of queries from employers who have said, look, I'm not sure, how do I verify this? I don't know if this employee is being completely honest. And I mean, yesterday I got a call from a client where an employee had actually taken a screenshot of a picture that he got off social media and then sent to his employer pretending that that was his lateral flow positive test, and it wasn't his at all. So there is definitely lots of that going on in the background. But it is very difficult to, if an employee comes to you and says, I've done my lateral flow, here's my picture, I've registered it on the NHS app, and here's my confirmation text. There's very little you can do outside of that other than ask for that information.
Okay. Very good. Thanks, Judy. Did you want to add on? Was there anything in particular points you wanted to cover now? That I know I stopped you mid-flow there. Sorry about that, but that question came in. Another one just came in there. What about staff who are jabbed who refuse to come to work?
Oh, so, well, that, I mean, if they have been vaccinated, is it because?
Yes, and they still refuse to come to work. I'm not sure. That was just a question there now from, if you want to add the person who asked that question, if they'd like to add more detail to that. But yeah, the question is, what about staff who are vaccinated but refuse to come to work?
I mean, there should be no reason behind that, unless, you know, unless they're maybe living with someone who is extremely vulnerable, and maybe there's further guidance around that. So I'd say I would need a bit more information.
More information on that.
Paul.
Yeah, I have maybe it's coming in here now. Yes, staff who are vaccinated but say they want to take a PCR and don't feel comfortable and want to isolate.
Yeah. Okay, so actually, I've been talking to PHA on a couple of different scenarios this week, and the guidance is it's a lateral flow test. That's what we take our guidance from. So if the lateral flow is negative, and that individual is their test is negative, they're not a close contact, or they are a close contact and they're vaccinated, they should be back to work. There's no reason why they should be waiting for a PCR. So
basically the lateral flow test is the Bible at the moment. That's the decision-making tool until rules change. So if somebody says, well, I'm a bit uncomfortable about the accuracy or whatever, sorry, you have to go on the basis of that.
Right.
Yeah, okay. No, I think that answers that question.
Yeah, and if they continue to refuse to return to work, then you're probably looking at a form of discipline, because they should be at work because the lateral flow test is saying so. Yeah, but I guess what you're saying is that each case deal with it individually, because there may be other extenuating circumstances that could be the reason why that person, you need to put that into your decision making. So yeah. So just the last bit, that okay, so just to encourage the guidance, what about SSP for 4 consecutive days? Would they still be entitled? Yes. So if they have been off work for 4 consecutive days, if they're self-isolating, now is this, I'm just wondering, is this another add-on to this individual who has been off because they won't return to work? Yes. Yes. It is, okay. Yeah. All right. So this individual is done their lateral flow. They shouldn't be self-isolating because the lateral flow is saying they're clear to come back to work. So they're not self-isolating. So they shouldn't be receiving SSP. Okay. So I would say in that particular case, they should not be receiving SSP under the SSP scheme. And as they say, that's great. Thank you. I think you've answered the question there, Julie. Thanks so much for that. And thanks to the contributor there as well. And they can always contact you directly, Julie, if anybody has any queries, of course, because as you say, every case nearly is its own little story, and you just need to be careful from an employer's perspective that you're making sure you're going through due process there. Yeah. So, I just had one final point. Julie, please, yeah. Very briefly, because I know Dawn has a lot to cover too, and it's more or less just to highlight about pregnant employees and COVID. There has been new guidance that has been released on Friday. So anybody on here who has got pregnant employees within their workplace, there is a requirement that they need to look and do a risk assessment. They are recommended the employee themselves take regular lateral flow tests. The employer must look at where is the risks, and they must mitigate those risks, because pregnant employees are still seen to be in the higher risk category in terms of COVID. And I suppose there's still, although the research is saying it is safe for pregnant employees now to get the vaccine, I think a lot of employees or a lot of pregnant individuals may not necessarily have taken up the vaccine, so they're still putting them in that higher risk category. So it's just anybody who has got employees who are pregnant should look at those additional requirements and do your risk assessment. And that is everything covered, Paul. Thank you.
Yeah, I'm just going to ask one last question, Don, if that's okay, of Judy, just before I hand over to you, Don. Many businesses are now using remote working hybrid models with the view to improving staff work-life balance and reducing business costs. However, does Judy hold any concerns with the detrimental impact on communication and or company culture? And what suggestions would you have for businesses to deal with this? I mean, this is a common theme, really, isn't it? I mean, if you're an established employee within a business and you know the workings and you've built those relationships over many years, it's a lot easier than if you're a new appointee, company culture, well-being, and all that other. I guess that touches on all those things, Judy. But interested in your view on that one. That's a question from Mark Johnson there.
Yeah. So I mean, look, I actually did an article on this pre-Christmas. I mean, if you looked at the stats pre-COVID, there was only something like 5%. Hybrid working, home working was almost unheard of. It was like 5% of the workforce worked in that kind of hybrid home working arrangement. And now we're probably moving more towards and around 40% or more of employers actually looking at that type of model. There's no one size fits all, Paul, that's the thing. And the research is also saying that even though those individuals who like the hybrid working, that it works for them and it works for the employer, the negative side of it is those working relationships have certainly taken a knock as a result of it. So whenever we go to look at, whenever we are talking to clients about a hybrid or a home working policy, we sit down with them and look at, well, what do you need for your business? What's the input from the staff like? So certainly, even though it might fit for the employer, so it might be a perfect fit that hybrid working or home working is good for the business. But what about the employee themselves too? Do they actually like home working? Because lots of people do like it, but there's lots of people that don't like it either. So I think it's an all-round approach. Talk to your staff, see what they think about it. Do they like that arrangement? What do they feel works? What do they feel doesn't work? And also build into your policy lots of connections. So do you have a Monday meeting? Do you want all your staff to be on the Monday? Do you have a Friday roundup? Do you want your staff in for that? So you kind of build into your policy that there still is those connections with staff, so that it doesn't mean that your staff are completely working remotely and there is no connection and no communication with them at all. So I think it's very much around your policy, how you manage it, taking into account how staff work. Do they work well at home? Do they not work well at home? And building something that fits everyone into that arrangement.
So it's really taking an angle of the individual and seeing what's best for the individual and the business, but not actually going and looking at your cost base and saying, well, we can wipe out that particular cost line and just say, well, everything else will fall. That means we're all working from home. It's not as simple as that. You really do need to put a lot of thought into what's right for the individual to make it work. And of course, the business, that there has to be a match there. Okay, very good. Hopefully that answers the question there. Thanks very much, Mark, for that question. Dawn, if I could hand over to you, and thanks for being so patient there, but there was some really good stuff coming through there, and it is, and we'll maybe come on to a couple of questions. If anybody else wants to ask any more questions, Judy, please put them into the text box there, and we'll try and get to them before the end of the event. So Dawn, if I could hand over to you, and thank you.
Great, Paul. Can I share my screen, Paul?
Yeah, you should be able to do that. Yeah, that's it, Dawn. It's there. Yeah, lovely.
Good morning, everyone. It's great to be back. As Paul said earlier on, it's like old times again. I would have to say it has been a horrendous year for business last couple of years, but I do believe we are turning the corner, and hopefully this year will be a lot better for most. Today, I suppose I have some good news and some not so good news, and I have a lot to cover, so I'll try and get through it as best I can. If you have questions and we don't have time to answer them, either put them through Paul, through Chamber, and we'll come back to you, or email me as well. Either way, we will come back to you. I do believe that there will be payback for all the support that government paid out during this period of the pandemic. And I suppose what I'm going to do is cover some of the increases that are going to come in April and some of the benefits that you may be able to take some advantage of. I suppose the good news that we had in December was that hospitality and tourism were to get grants. And they ranged from 10,000, 15,000 to 20,000 pounds, depending on the rateable value. And as you can see from the slide, there's different types of businesses that come under that category: restaurants, pubs, cafes, etc. So it was good news. I have to say it's some kind of a contribution, but you know, it's a sector that has been on its knees, and it'll only be a small contribution to their overall costs. As far as I'm aware, they haven't hit the ground yet. We were told that on the 10th of January, they would be contacted to see if there was any change in their circumstances, and then the grants would be paid out from that. So if they're not already there, they will be on their way. So really what we have going forward is some taxing times, and in my opinion, HMRC will be given the green light to go ahead and really go hard on collection. All this pandemic support has to be paid in some way or other. And I suppose we have seen this on the ground already, and some of my associates and colleagues on the mainland, when I was talking to them, have seen the same thing. For an example, a guy contacted us out of the blue the other day to say that he had a letter from HMRC looking for 2012 and 2014, where he had received tax credits, and they reckoned that he had been overpaid and they were looking to claw it back. In another case, 2018 child benefit, they were looking to claw that back as well. And again, my colleagues across the water have come up with some of the same examples. So I would say HMRC are going to put every effort into looking to see where people were in default, where they may have got overpaid, and I will say they'll chase that money hard going forward. So maybe on that good note, let's go to the rest of it here. One of the increases that we expect 31st of March this year, the VAT is to be raised again for the hospitality and tourism sector. It went down to 12.5% to give them a breathing space, but it's going to come back up to 20%, and we haven't heard anything to the contrary yet. I would expect that Paul and the Chamber team will continue to lobby to try and get that extended, and hopefully they will, but I wouldn't be too sure in that happening. And it was a great breather for the sector. As always, the national minimum wage increases each year, and this is the rates that are now going to hit us in April. As you can see, a wide variety of increases from 4.1 up to 9.8 and even 11.9, which is quite significant. And you know, when you look at the increases from the 16-17-year-old to the 18-20 bracket, or the 18 to 20-year-olds to the 21-22 bracket, from 481 to 683 to 918, quite significant increases there. And I just did a small example on it, so that if you had a 17-year-old moving up into the next bracket, and say they worked for 35 hours a week, that would be an annual increase to that employer of 3,676. Great for the employee, but for an employer that maybe is quite tight in margins, that could be a significant increase that maybe they just could not afford to manage. Again, take a 20-year-old moving up on the same example, that would be a cost of 4,277 for gross wage. And that's not taken into account the national insurance either, and maybe some pension contributions. So significant changes coming. Normally you wouldn't mind that, but when we're still suffering from the pandemic and businesses are still trying to make do, could be quite significant for them. So as I said, the other increase that we're going to see is national insurance. Boris said that to help the National Health Service and social care, he was going to put 1.25% onto national insurance, and that's going to hit again, all the different categories. So it's going to hit employees, it's going to hit the self-employed and their class 4 contributions on profits, and it's going to hit employers in terms of their class 1. The class 1A is for the employer on benefits in kind, and 1B as well. So again, could be significant costs in terms of labour for businesses going forward. And it's something that you really should be looking at and should be planning for over the next couple of months. We also see an increase of 1.25% on the dividend rate, and dividends are going up from, there's 4 different brackets actually. There's 0 rate, then there's at the moment 7.5, which will be going up to 8.75. There's a 32.5, which will be going up to 33.75, and there's a 38.1 at the higher level, which is going up to 39.35. So again, for those that take part dividends or take full dividends, they're going to have a significant increase in their tax going forward. And again, that's very much something that they should be looking to plan for, talk to their accountant, or do their sums in terms of what that increase is going to be when they're going to do their next return. The government had said that they weren't going to increase taxes, and that's fine and well, but at the end of the day, what they did was what's called the big freeze. And instead of rising taxes, they are actually freezing a lot of the limits in terms of our personal allowances and basic rates. So you can see from that slide, the personal allowance has gone up to 12,570 for 22. But from that point on until 5th of April 26, that's going to be frozen. And when you think at the minute that inflation up to December was running at 5.1 and wage increases, then effectively you're going to have less in your pocket at the end of the day. So while the tax rate hasn't increased, you're still going to be out of pocket on that. And in terms of the basic rates, again, you're going to be into higher rates before you realize it. Capital gains exemption is going to sit at 12,300 as well, as is the inheritance tax band and the residence band as well. For those people that had to register for VAT, again, that usually went up year on year, but again, that's been frozen at 85. So you're going to maybe have a lot of people hitting that 85,000 that are going to have to register for VAT again, and the deregistration threshold has stayed the same. So it really is a stealth tax on behalf of the government, and again, something that you really have got to consider, because it could be a significant difference when your tax return is prepared next year. In terms of making tax digital, the revenue have been talking about this since probably 2016. Initially, the software companies weren't ready, then the revenue themselves weren't ready. And what they did was they brought in a pilot scheme for those that were already filing VAT returns, because they thought that was the easiest group to get to see how it was going to work. And those people have been filing their VAT returns quarterly, digitally on a digital platform since they brought this out. Now, they were to roll it out over the last 2 years, and because of the pandemic, they've been pushing those forward. But as of April, everybody else that is registered for VAT, that's those under the 85,000 that has registered, will have to make their VAT returns on a digital platform. And again, the system is not that easy to get through. It takes a bit of time. So I would suggest that anybody that isn't already filing digitally to start looking at that, start planning for it, and getting ready for the day that they have to push that button again. Further down the road, the rest of us will have to go digital. Income tax, corporation tax, and even landlords that have income of in excess of 10,000 will all have to file digitally and will have to file quarterly returns. So it is coming, and the quicker that you get to grips with it, the better. This is the Self-Employed Income Support Scheme, and this is where the self-employed received grants through the pandemic. And there was plenty of warnings out that if you were going to claim, to make sure that your claim was correct and that you were claiming on the right basis. And as I said, revenue are now going to be looking to see if anybody did claim when they shouldn't have. And the question is, are you compliant? Have you been compliant? And if you find that you made a mistake in claiming, then now is the time to go back to them and say that you've made a mistake. It is much better you going to them before they get to you, because at least they'll be mitigating circumstances and the penalties won't be so high. The other thing that you've got to remember, and what we've found a lot of people making mistakes on, is there is boxes on the tax returns where you have to tick to say that you did receive these grants. And you also have to make an adjustment. You can't just lump it in with the rest of your income. You've actually got to add back the grants that they've given you, and then you show them in a different section. And what we have seen coming through from the revenue for people that have filed earlier in the year is that they have noticed and they have made adjustments. In a couple of cases, they've actually added on grants that were already in the tax returns previously. So again, if you get an adjustment from HMRC, please check it carefully, give it to your accountant, have them look over it, because things are tight and you don't want to be paying any more tax than you have to. So it is a real problem going forward. On a lighter note, those people that were directed to work from home can claim an expense, and they can claim relief up to £6 a week. It does seem a bit paltry, and when you think of the costs of electricity and everything else, it doesn't seem an awful lot, but at the end of the day, it's still there. You are entitled to it, you can claim it. And the two ways to claim it is either through your tax return if you do one, or you can get a special form and you can claim it. And you can even claim a year in advance if you think that you're going to be directed to work from home in the next year as well. So for those that are at a 20% basic rate, they will get £120 a week relief, and for those on the 40% will get £240. So again, worthwhile to claim that. Better you have it than the revenue have it. Another one that we have found that people have missed quite a lot, this is a relief for married couples allowance, and where you have a couple, if one of them either isn't working or doesn't have earnings, or their earnings are below the personal allowance level, which this year is 12.5, you can actually transfer your surplus allowance 10% over to your spouse or your partner, and they can claim that relief on it. And what we've seen is that people have missed this. Now, the person that actually is giving it away is the one that puts in the claim. And sometimes systems have been quite difficult to do it through automated systems. So if you haven't got an automated system that will accept it, put a letter into the revenue. I would put 2 letters in, one giving the allowance to your spouse or partner, and the other one actually claiming that allowance back again. And with that letter, you've got to give 2 pieces of ID, which could be maybe a P60 or a license. And the best of it is, the good news is that you can go back to year 17, 18 and claim from that right up to the current tax period. So there is a bit of savings there, that if you put a bit of thought into it and a bit of effort, you can get that money back from revenue. And it's been coming back quite quickly once the claim has been in. So certainly worthwhile trying that. For those people that self-assess, I'm sure you'll realize that as well as your tax liability here in the UK, you pay your tax liability in advance for the next year with 2 payments on account, one in January and one in July. And there's 2 issues with this. One where we have seen that people maybe have made payments on account last year. They've calculated their tax for this year, and because of the pandemic, the results haven't been that good, so that they may have got a repayment of the payments on account that they made for that year. And what I would say here is just to be careful, because if there's no payments on account that you have to make because of your low earnings this year, going forward, if your profits have gone up next year, then what you're going to be looking at is you're going to be looking at your full tax liability plus half again for your first payment on account. So effectively, you'll be making 1.5 times a tax payment, and that can be a big thing at a January when maybe things aren't that good from a cash flow point of view. So If you have got a refund of your payments on account, or if you haven't had to make any, then maybe put a few pound by throughout the year to prepare for the situation where you might have to pay additional tax if you're making profits. The other situation, the reverse of that, and just let me get my notes here on that. So what we have found is that, again, through the pandemic, where people may not have necessarily had high profits, but because the grants that they received, all of a sudden they have larger profits this year. So again, based on those larger profits, they will have to make payments on account going forward. And if they truly believe that in the year ahead, those profits aren't going to be maintained, then they can actually look to reduce the payments on account. And you can do that through your tax return. And you just put the reason in to say that you don't expect the same level of profits again. And we have seen this happening. So it is just something that you can think about and that you can do. One of the great benefits for business at the minute is the R&D tax credits. And this can come by either a cash payment from HMRC, or it can be a reduction of your tax liability in the year. And it's for anybody that's maybe developing new products, processes, or services, or enhancing the ones that they have. It doesn't have to be cutting edge. It can be new to you, something new to you, but it's amazing how many people don't know about this benefit, or maybe don't even just take the time to gather the data to be able to pull it together. And what you can get is, if your costs, you can get 130% of your costs by the tax rate, which in corporation tax could be 19% at the minute. So it is a very worthwhile benefit. I have a client who over the last 5 years has actually received 160,000 back from the revenue for claiming R&D tax credits. So again, something to think about, and certainly a very worthwhile credit going forward. The other thing is, don't forget about the super allowances. Again, to try and stimulate the economy, the Chancellor was given 130% on capital allowances on new equipment. That's until March 23. So please take advantage of that. If you do want to invest in some equipment, it has to be new equipment. And unfortunately, it is only for companies. It does not apply to sole traders. But for those companies investing, now is a good time to do that, and do it before each March on that one. Another thing that's on one hand not great, but on the other hand, you can do something about it. People with families will claim child benefit. Anybody that has earnings over 50,000, there could be a potential clawback on those benefits. And the horrible thing is that if you have two people that are earning 49,000 each, there is no clawback. But if you have one of those in the family that is earning 50, then you will have some kind of a clawback on that benefit. So the advantage to you is, again, a bit of tax planning. Have a look at your earnings, see if there's any way that you can equalize your earnings between spouses. So say, for instance, if the higher earner has maybe investment income that doesn't necessarily have to be in his name, but can be transferred to her name, or vice versa. It's a way maybe of bringing both down below that 50,000 and avoiding that potential clawback that you have. So I think that's it for now for me. Quite a lot of things to think about going forward. I think you should be planning ahead. Certainly tax will be higher in the year ahead. So either look at your own circumstances or talk to your accountant and see what they can do to help you minimize that situation.
John, thanks so much for that, but that was really, really comprehensive, and some topics you touched on there that I guess aren't on people's radars, particularly that R&D tax relief one. I think
Yeah.
That'd be one I think maybe we should even consider doing a separate webinar on, because there's such a potential there.
It's amazing, Paul. It is the greatest benefit. In a lot of cases, I have told people, that they should think about it, they should do it, just should work with it. And people just don't take the time. They're so caught up in getting their own work done and getting by day. But when you look at that client of mine's, 5 years, 160,000, absolutely amazing. And what they've been able to do is transform their business, being able to claim that credit. So I think everybody should be aware of it, everybody should be thinking about it, and everybody should be seeing how they can make the best of it. And as I say, it doesn't have to be that it's cutting edge. It could be something like a process that you have in your business that you are looking to make some energy efficiency savings. It could be a product that you want to amend or adjust or adapt so that it suits a particular client. It really is amazing, and it should be widely used.
Yeah, no, that's brilliant, Dawn. I think we will do a separate webinar on that. If you could support us, that'd be brilliant, because that's one area. And all the other things you mentioned with the child benefit one, I mean, there are practical things you can do to minimize your outlay when it comes to tax. So really, really great stuff there.
Married Couples Alliance too, Paul. I mean, it'll bring in the guts of what, 900 odd pound if you haven't made the claim over the last couple of years. So there's a straight into your pocket with just 2 letters or a tax return to the revenue.
Okay, well look, I think we'll take a separate discussion on that one, Dawn. I think we could dig a bit more into detail and maybe we could get some more hard examples potentially for a webinar. So thank you so much, Dawn, for that. That's been really, really great. Just a couple of questions came in there. I just wanted to cover off. There's one for you, Julie, I think. I hope there's no noise. There's a guy cutting concrete outside Bishop Street here now, so I hope you can't hear that. If there is a staff member that prefers to work from home, given the current guidelines, rather than the hybrid model, can we encourage them to come in as long as strong risk protocols are in place? That'd be one for you, Judy, I guess.
Yeah, okay. So, I mean, look, I think the requirement is to make sure that you're doing your risk assessment and that you've avoided all of those risks, so you have the proper provisions in place. We are still encouraged where possible to work from home, but if there's a business reason in terms of why the individual should be in their place of work and not working from home, then it's all down to that justification around that. And I think it's very much, I've come across this on many occasions, Paul, and sometimes the individual is just concerned about certain things, and it could be just sitting down with that individual and having the discussion around, well, is there any particular fear, or is there something that we can do to kind of, reassure you in some way? So I would, have that softly approach, first of all, to see if you can come to some kind of arrangement or agreement that way.
Yes. Okay, Judy, thanks for that. Just another question I have for you there. You may have touched on it already there, but what happens if an employee is still testing positive on a lateral flow test on day 10 of their isolation? Are they allowed to return to work? I think.
Yeah, it's really strange, because previously, before the early isolation period was announced, employees were not testing themselves because they didn't need to test themselves. The guidance was isolate for 10 days and then return to work. Now that the early isolation period is in place, employees have started to test themselves from day 6, day 7, get to day 8, day 9 and realize they're still positive. Come to day 10 and they're positive. The PHA are saying that while the employee still has a positive test, they must still isolate. And at the point where they have 2 consecutive days of a negative test, they can then return to work. So we are seeing that some employees are having to isolate beyond the 10 days.
Okay, Judy, thanks for that. And last question then for you, Judy, is what can I do if we have to change opening hours or even close the business for a few days due to staff shortages?
I mean, I've had a couple of queries in regards to that, where employers are really struggling because of the amount of absence that they're having to deal with. And some are so extreme that they just don't have enough staff to even open their doors. Now that is happening few and far between. So I think a couple of things, a couple of options. You may want to talk to your staff and talked to them about potentially taking annual leave. Now, you can't force that, but you could have the conversation if they're happy enough to take annual leave from their annual leave pot, then that's one option. And obviously that would ensure that they get fully paid for those days. The other suggestion would be to look at your contract of employment, and this is where your terms and conditions are really important around the wording and what you've got on there. So if you've got a layoff clause, which means that in circumstances that are kind of beyond your control, that you can staff on layoff for a temporary period of time. So you may be able to use your layoff clause. Payment for the staff is on around £30 for each day that they're on layoff. They're entitled to up to a maximum of 5 days guaranteed payment in a 3-month period. If they work 5 days a week, it's 5 days guaranteed payment. If they work 4 days, 3 days, 2 days, it's 4 days, 3 days, 2 days of guaranteed payment in a 3-month period. So that's the kind of options that you would be looking at there.
Another question here in from Jennifer is, what is considered full vaccination? Is it the 2 vaccinations, or does it include the boosted? Is full vaccination the 2 plus the boosted now?
No,
No.
2 vaccinations, and that you had to have had them within so many days. And I can't remember the number of days, Paul, what that is, but it's the 2 vaccinations, not the booster. And you have to have had it for there. Melissa's saying 14 days. I think, is that what she said?
14 days, yes, yeah.
From that date. So
Okay.
booster doesn't come onto it.
Okay, very good. Thank you, Judy, for that. Dawn, was there anything else you'd like to add there?
No, I suppose the only other thing maybe would be just to note that there will be an increase in the corporation tax rate as well. So for anybody that has profits over 250,000, rates for non-ring-fence profits will increase to 25%. Currently, it's 19%. There is a small profit rate for up to 50,000, which is going to be 19%. And the space in between that 50 and 250 is actually going to be at a marginal rate. So again, something for companies to take to be aware of, take account of, and plan for that, because that marginal rate could be a lot higher. So they need to be aware of it.
Okay, Dawn, thank you so much. And Judy, maybe just before we wrap up, anything else you'd like to add?
I don't think so, Paul. I think we've covered a fair bit. So
a lot of topics there covered this morning in such a short period of time. So look, Dawn and Judy, thank you so much for your continued support of the Chamber as members, as board members, and now the other things that come with that as well. So thanks so much for that. It's been really insightful, and the topics came up. I think we've answered most of the questions that came in, and if anybody else has any other questions that are on the call, as Dawn said, just please forward those through to the Chamber. We'll circulate the slides, if that's okay with you, Dawn, to the attendees. And I think it's good for them, just touch points if it will trigger any memories that they may want in terms of questions need to be answered. So if there aren't any further questions, Judy or Dawn, I think I'll wrap up. It's just nearly midday there. So wish you all a very, very good day, and thank you for your continued support of Chamber. So
Thanks,
have a great
Paul.
day. Take care now.
thanks, Paul.
Thanks, everybody. Take care.
Bye now.